CPI data creates volatility in a good way. That's our topic for today's Backstage Pass. Stocks and bonds are up sharply so far this morning. Mortgage rates are going to open up better. We'll talk about that more in just a minute, but the data of the day is CPI, the Consumer Price Index. Now, CPI measures inflation at the consumer level, and the reading for the month of July came in flat month over month. It was expected to come in at 0.2% higher. The reading year over year came in at 8.5% on the headline. It was expected to come in at 8.7%, and the previous reading for the month of June was at 9.1%. So both of the headline data points came in 0.2% better than what was expected. Now on the core CPI strips out food and energy costs. It actually increased for the month of July by 0.3%, but the forecast was 0.5%. And then year over year, it stayed flat, came in at 5.9%, but the expectation was at 6.1%. So core CPI beat expectations by 0.2%. Headline CPI beat expectations by 0.2%. The bond market's happy about that. So basically, if the data would have came in on a few of the metrics at 0.1% better, bond market would have been happy. But at 0.2% on all of the metrics, I mean, it's a party on the bond market today. Basically, mortgage bonds are up 48 basis points right now at the time of recording. The 10-year yield is down 8 basis points. That means the mortgage rates are going to open up better today. But we're going to keep an eye on it closely because it definitely is a little bit of a knee-jerk reaction. We could see a bounce back down on the mortgage bonds. Just a normal, natural bounce. So we're going to keep an eye on it. If that does happen, lenders that opened up their mortgage rates today on the initial data, they could reprice for the worst, believe it or not, throughout the day. But that's going to be repricing on today's rate sheet. All right, that reprice for the worst, if it does happen, not saying it's going to, but if it does, that's going to be better than where we closed yesterday. So still going to be in better territory. We're just going to keep an eye on it. That said, right now, average interest rate is about 5.15%, paying no points. If you want to get underneath 5%, you can get it at 4.99, paying about 0.1%, about 12 basis points. So good to see those mortgage rates coming down and got some options for lower than 5%. Now last week we hit under 5% on the average with no points, but some of the data that came out in the middle of the week last week kind of pushed us back up. Now we're getting back down into that just right at 5% and under 5% average interest rate for a 30-year conventional fixed. Now, that's all the news that we have for today. Tomorrow, we're going to be bringing you Mortgage Bankers Association application data for last week. And then we also have core producer prices. That data is going to come out. That data could move the market. The markets are very data-driven right now. They're really looking at all the data that's coming out. So some of these reports that don't normally move the markets do have the potential to make a market move. And so we'll be looking at that core producer prices tomorrow and see how the markets react to that. But listen, until then, we're going to enjoy the rates where they are today, and hopefully bonds can continue their rally throughout the day, and we could see some repricing for the better. So again, we're going to keep an eye on that. But in the meantime, make sure you hit that like button. If you have a question, leave a comment. It takes just a couple seconds. Write out a comment, leave a question. Do not forget to hit that subscribe button. If you haven't subscribed yet, why not? And then last but not least, remember to stay positive. Hope you have a great day, and we'll see you tomorrow.